What is up, everybody? It's Stas here. Welcome back to another video. So today we're going to be talking about how to invest $1,000 in 2021, and I want to make it as simple as possible for you. And the way that I did that is I made three different pies. One of them is a conservative pie, one of them is a moderate pie, and the other one is an aggressive pie. And I want to dive deeper into these pies and show you guys how I would invest based on different risk tolerances right now with $1,000 in 2021. So if you guys find value, you know what to do. Hit the like button, subscribe to the channel, make sure to get yourself into that Strive Smart Discord chat, the Facebook group, get 4 stocks from WeBull and $30 from M1 Finance. All of those are free and linked right down below in the description box. So starting off with the conservative pie. And first and foremost, guys, you know this is not financial advice. Don't buy into anything we're going to talk about today because I'm just simply talking about it today. You guys must go out there and do your own research, your own due diligence, and understand everything on your own before diving into anything that has to do with investing your money. So, pie number one, this is the conservative pie, and I have it right here on my iPad. You guys can see it. There you go. You can see it, but obviously you can see it here on the screen as well. So this is the conservative pie. You have 10% in gold, you have 40% in bonds, you have 30% in domestic stocks, and you have 20% in foreign stocks. And honestly, this might be even a bit too aggressive for the conservative people out there, but I'm looking at this through a lens of more of a younger person, let's say. If you're maybe 70 years old, 60 years old, this might be a bit too conservative or too aggressive rather, because you're in 50% equities with this particular pie. But if you're somebody that's 20, 30, 40, 50, this could be a conservative pie for you. So you have 40% bonds, and the truth is I'm not that big of a fan of bonds, but they do offer stability. And with today, the interest rates being low, the dollar is being devalued. That's another reason why I'm not that big of a fan of bonds. But if you're more conservative, you're looking for maybe like a 1-2% return, right around that ballpark, depending on what bonds you pick. 40% in bonds could be for you. And we have 10% in gold, which gold is something that is a safe haven. If you're more of a conservative investor, you'd want to have some store of value within your portfolio, because going back to what I just said, the dollar's being devalued, meaning gold is a place where people are going to pretty much not lose their purchasing power, because we're seeing a lot of money printing, a lot of stimulus, and that is obviously, like I said, devaluing the dollar. So having a bit of gold in your portfolio, 10%, that's pretty solid if you're looking at more of a conservative approach. And with domestic stocks here, guys, it's 30%, and domestic stocks is U.S. stocks, right? U.S. stocks, anything in the United States, and you could really pick whatever you want, right? This 30% could be, maybe 10% in ETFs, maybe 10%, another 10% in individual stocks, maybe 10% in the S&P 500, which would be 30%. The idea here is to really do it based on, or pick the stocks based on your risk tolerance. And since this is more of a conservative portfolio, this pie right here, you could maybe do, blue chip stocks, maybe something like Johnson & Johnson, maybe Pepsi, Procter & Gamble, companies like this, right? You can do 15% in those, maybe another 15% into the S&P 500, right? Which would be 30%. So that's how you could invest the 30% conservatively. Maybe you can do some high dividend yield ETFs, one that I like is VYM. That's from Vanguard. I'm pretty sure that, yeah, that's VYM. And yeah, that's what you could do with the conservative pie. And when it comes down to foreign stocks, this might be even a bit too aggressive, like I said earlier, which is why you must do your own research and really, create your own pie based on your risk tolerance. But in this case, 20% foreign stocks, this could go into anything like VEA, which is a Vanguard Emerging Markets ETF. I own that. You can own maybe Chinese stocks. You can own any other foreign stocks in whatever country you want, really. This is, it all depends on you. But that's what the conservative pie is. 10% gold, 40% bonds. That 50% in total adds a bit more stability. And then you have domestic stocks, 30%, foreign stocks, 20%, which gives you 50% of a little bit more risk on, right? And when it comes to the $1,000 in total, obviously you'd have to, divvy that up. So it'd be $100 in gold based on this conservative pie, $400 in bonds, $300 in domestic stocks, and another $200 in foreign stocks, and that would be $1,000 in total. And what you guys see right here is the moderate pie. You can see this one has the same amount of percentage allocation to foreign stocks, and it has a little bit more allocation to domestic stocks, 40% domestic stocks, 20% foreign stocks. That's 60%, right? And we have a little bit of Bitcoin in here. So if you're a little bit more moderate, you're not extremely conservative, you're not extremely aggressive, you're in the middle, hey, you're going to want a little more domestic stocks, roughly the same foreign stocks percentage, a little bit of gold at 5%, a little bit less than the conservative at 5%. You can do 5% silver, which in this case, guys, silver and gold are both precious metals, but silver is a bit more volatile. It goes up more and it goes down more than gold, but it has more upside. Let's put it that way. So you can have a bit of silver in there on top of the gold. Gold's about 10% of the portfolio. And then, like I said, you have some Bitcoin at 5%, which in my opinion is more speculative than silver and gold. But I also think it does belong in most people's portfolios. I don't want to say everybody's, but I think most people out there should have a little bit of Bitcoin. So that's 5% there for this moderate pie. And then we have 25% bonds, which is down from the 40% bonds in the conservative pie. So the moderate one, I'd say this moderate pie is probably the suitable for most people out there. I don't want to say everybody, but for most people out there, if you divvy your money like this, and with $1,000 for this moderate pie, you'd put $400 in domestic stocks, $200 in foreign stocks, that's $600 in stocks in general, right? You put $50 in gold, $50 in silver, $50 in Bitcoin, that is 15% of the total pie. And then you'd have another $250 in bonds, which would complete the pie here, which again is the moderate pie. And let me know your thoughts down below. At any point in this video, what do you think? Would you invest in the conservative pie? Would you invest in the moderate pie? Or would you invest in the aggressive pie, which you guys see right here? This is pretty dang aggressive, heavy in equities. We can see here 55% in domestic stocks, 25% in foreign stocks, 5% in silver, which remember we said silver is a bit more volatile than gold, and it has a bit more upside than gold, which is why we don't have gold in the aggressive pie and we have some silver at 5%. We have 10% of Bitcoin, which is up from the 5% in the previous moderate pie. And then we have a very minuscule amount of bonds at 5% bonds. So when you're looking at the aggressive pie, remember in the more conservative one, we said maybe you can do blue chip stocks, Johnson & Johnson, Procter & Gamble, companies like that, right? Well, with this one, the aggressive one, you could do some of those. Remember, we have 55% domestic equities. We could do maybe 10% in the blue chip stocks, maybe 20% in an ETF such as VOO, which tracks the S&P 500, which brings the total to about what's that, 20, I forget the math, but you guys get the point. You can do a little bit in blue chip, you can do a little bit here in an overall market ETF, and then you could also throw in some growth stocks. You could throw in maybe a Tesla, you can throw in maybe a Square. I'm just throwing names out there, right? You can throw in maybe a SPAC or two if you're looking at having maybe 5% of the domestic equities be SPACs. You can throw in some SPACs. You can do that with the aggressive portfolio. So that's what you could do. And again, you can tailor it to what you guys want to do based on your risk tolerance. I'm just trying to run some ideas through your head, get your brain moving so you can think, okay, what do I want to do for my portfolio? And with foreign stocks, very similar to before. You can do VEA, an emerging market fund. You can do Chinese stocks. You can do any type of stock that's outside of the U.S. that would qualify here for a foreign stock. And the way $1,000 would divvy up here, it would be $550 in domestic stocks, $250 in foreign stocks, $50 in silver, $100 in Bitcoin, and $50 in bonds. So that's it, guys. That's how you can invest $1,000 here in 2021. I gave you 3 different pies, 3 different ways you could divvy up that money. And obviously, we didn't talk about real estate in this video. We didn't talk about Pokemon cards. We didn't talk about baseball cards or any other forms of investing because honestly, you could buy baseball cards, Pokemon cards with $1,000, but I don't know much about that, so I'm not going to do that. But if you do, hey, go ahead and do you. And the reason why we didn't talk about real estate is because what could you buy with $1,000, guys? Could you buy maybe a cardboard box in California with $1,000, maybe a 2x2 cardboard box you can live in for $1,000? You can't buy anything for $1,000, guys. Nothing whatsoever. But yeah, you could buy some stocks, some foreign stocks, crypto, some gold, silver. That is what you could do, which is why that's what we talked about in today's video. So I'll catch you all in the next one. If you all enjoyed it, hit the like button, subscribe to the channel, get your 4 stocks from WeBull. Those are linked down below. All you have to do is deposit $100 and you literally get 4 stocks valued up to $1,600. You could also get $30 free from M1 Finance. That's also linked down below. All you have to do is open up an account, deposit any amount of money, and that's how you get 30 free dollars. So I'll catch you all in the next video. Thanks for watching. As always, keep crushing the market. Stay safe out there, guys.